Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our stock market weekly recap for week 9 of 2021. We're going to go ahead and cover the dates from the 1st of March through the 5th of 2021. And at this point we're going to go ahead and kick it off by taking a look at last week's changes, which are up on the screen. Then we're going to go ahead from there, jump into some news, take a look at 3 articles that I want to cover of what happened here this past week, or just kind of recently here this weekend. Then we'll take a look at the 4 main indexes, stock futures going into Monday morning, the entire S&P 500 performance for this past week, what stocks were up, what stocks were down, very similar to this heat map, but we'll kind of see the progression of this week. Then we'll take a look at oil, dollar, silver, gold, bonds, the 10-year yield, and current mortgage rates. I have seen mortgage rates get really high right now. I have seen offers in the 4% range. So that is a huge difference between just a few months ago where it was down in the 2% range. So hopefully a few of you guys were able to lock in some good rates. But if you are looking to buy a home here in the upcoming months, the rates could be, slightly higher than they had been in the past. Anyways, with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course, give this video a thumbs up, make it blue, really helps out, really appreciate it, and let's go ahead and get into the video. Okay, so week 8, this is last week, the last week of February, we saw that the S&P 500, the Dow Jones, the NASDAQ, the Russell 2000 were all pretty beat up. Even Bitcoin dropped from a high of a little over 56,000 to 44,000. So big difference there. The S&P lost 2.45, the Dow Jones 1.78, the NASDAQ, the hardest hit their index, down 4.95, the Russell 2000 down 2.9%. Now we can see here some really bright colors here. Apple down 6.63%, Amazon 4.83, Google, Facebook, Tesla has, that one was beat up last week. I believe it was also beat up really hard this week too. So we'll go ahead and take a look at the progression for this week, and then we'll take a look at this one. This is the prior week going into what we just had happen this week. So let's go ahead and jump into some of the news here anyways. So the third stimulus check has been announced. So third stimulus check has been signed over in the Senate. The Senate has approved it on Saturday. It's going to be a $1.9 trillion relief package. It's going to go out to most Americans. Now, this is going to be for any couples making less than $160,000, and I believe for individuals it's either $80,000 or $90,000. I believe it's somewhere in that range. If you make less than that, then each individual gets $1,400 deposited into their account. So if you're by yourself, individual, you get $1,400. If you're a couple, if you're 2 couples, and then you have 2 children, that's $1,400 by 4. So it definitely adds up there. And they're kind of discussing this going back to the House earlier this week for final approval. But then once that does actually happen, then within the next few days or, to a week, after that, you can see those checks and instant deposit going into your account. So hopefully here within this week or the next week, that'll get signed off. And then within the next 2 or so weeks, individuals should see that stimulus check hit their bank accounts. Now with this news, what had happened is that the Dow futures had rose on Saturday. So I had been watching futures earlier after the announcement. I did see that the Dow futures did add roughly 155 points, or about 0.5%. The S&P was up 0.4, and the NASDAQ was essentially flat because it's been pretty techy. But it has been a whole year. We're going on one of the longest bull runs. The S&P 500, that's correct. The pandemic, when it did hit in March of last year, it did end the S&P 500's longest ever bull run, but we quickly recovered over that. It was a bit of a bear market at that time. The market had dropped, 20-30%, so it did go into a stock market crash at that time, and it took us out of that bull run, but we have recovered, and over the past, 2 or 3 weeks ago, we had been hitting new all-time highs. So we quickly ran through it, had a stock market crash, bounced back, but we're not out of the waters right now. We're still having, the pandemic is still affecting individuals. There's still people getting unemployed. There's still stimulus checks getting rolled out. There's still lots of businesses and individuals being affected by what's going on here in the world. So how long can this market go on again before it kind of deflates and returns back to reality, or just has another market crash? So that's what's on kind of my mind as far as like where the market's going. I am planning to invest here on Monday a bit on M1 Finance on 2 different accounts, so I'm going to be doing that. So I just like to see your guys' opinions. Where do you see the market going as of now? I believe that I did see a double bottom on Thursday, Friday. So let's go ahead and take a look here at the S&P 500. Let's go ahead and cover the indexes. So on Thursday and Friday, I saw a bottoming out here on Thursday, and then it retraced and hit that bottom once again, a higher high. So this was lower on Thursday. We had 3 consecutive days to the negative, and then hit a bottom. Then it bounced, started climbing, fell back down, but it didn't completely fall to where it had been before. So there's support at this point right here at roughly 3750. There's quite a bit of support going on within this range, and we just formed a double bottom there. So generally this is a positive signal for the stock market. So I do plan on buying a bit more here on Monday. I think Eaton Vance sold on one of my wife's account. So we have a little over $1,000 in cash sitting in that account. And I have another account that I'd like to also invest a little bit into some growth companies. So I'll probably end up doing that here because I do feel comfortable, even though Monday may be negative in the early morning. I don't believe it'll continue to stay negative throughout the week. So we'll kind of see how this kind of plays out. I'm not going to be investing it all at once, but I am planning to invest a bit there. Now the Dow Jones here had a bit of a double bottom as well, but you can see a higher bottom versus the prior on Thursday. So I believe that this is a good signal right here. And then we had that stimulus check get approved by the Senate. It's going over to the House. That'll get approved. And I think that'll be pretty good for the market as well. So overall, I do see some pretty positive movement there. Now the Dow Jones is still positive year to date by 2.91, the S&P 2.29. So we just saw that the Dow Jones overtook the S&P 500. The Nasdaq is still hanging barely there, up by 0.25%. It is negative by 2.06% this week. The Russell 2000 is negative by 0.4%, but year to date it is still up by 11.01%. I have been looking at some of these small mid-cap businesses, and I recently added ticker symbol MEI to the portfolio. I have roughly, I believe, $800 or so, but I am planning to taking that position to $1,000 here very shortly. I do believe that there are really good opportunities in the small mid-cap area of up-and-coming businesses. So that's definitely a focus of mine, to just kind of take a look at where I can find a little bit more growth versus just straight dividends after hours. Now this is where I was kind of discussing. Now we had the article here that talks about how Dow futures had popped up by 0.5 for the Dow Jones, and the S&P was up 0.4. Now if we take a look at stock futures right now, the S&P 500 is down by 0.32%. The Dow Jones is essentially flat at 0.01, and the Nasdaq is down by 1.06. And there we go, I just refreshed it. We have the S&P 500 down 0.58%, the Nasdaq down 1.5%, and the Dow Jones down 0.9%. We also see that over in Hong Kong, they are currently open and they are down roughly 2% right now on the day. So it is looking a bit negative here on Monday, but we could see that potential bounce back in the afternoon, midday afternoon time. So let me know what you guys' thoughts are there. Let's go to the 1 week performance. This is where we saw this sort of heat map on Facebook. So this is last week's performance. We're seeing a slowdown of Apple. So over here, we saw that Apple had bled out 6.31%. A lot of the other FANG stocks had also bled out, but right here, we're seeing a bit of slowdown with Microsoft, so that's pretty good. It was only down 0.34. Apple was actually positive by 0.13%. Google was up 3.72. Facebook 2.58. Amazon still down 2.99%, and Tesla was still down 11.48%. I don't think that Tesla is done bleeding off. I had looked at Tesla in the past, and I had read an article to you guys. I know I had posted it, where Tesla was trading at some 35 times earnings for where it's expected to be in 2025. So unless Tesla is going, perfect with their financials, with their estimates, with their deliveries. I know that they have a new truck, their new truck model. They have a new model of truck, or they're revisioning it, and that's supposed to do pretty well. But unless they have no issues at all within their company, I do expect Tesla to have some rocky waters up, for a future, a bit of time in the future. And the rest of the market seemed to have done really well. We see energy up very positive, Exxon and Chevron, 9 and 12% there. Coca-Cola and Pepsi up nearly 3% for Pepsi and nearly 4% for Coca-Cola. So there's a lot of strength out there in the market, even though we saw, I saw a lot of panic in the market these last few weeks. But I do believe that there's really good opportunity out there. I may end up buying some more Apple. I haven't bought into Microsoft in the past, but I have been meaning to buy into Microsoft as well. I, may potentially buy Google and Facebook as well. After it's been quite a while since I know I owned Google in the past. I don't know if I've ever owned Facebook in the past, but I am trying to build up a growth portfolio as well, just strictly growth companies without any sort of dividends, just strictly growth. Now, oil this week is up 7.61%. Year to date, it is up massive at 34.67%. There's just not a lot of oil right now, with Texas taking that cold snap, shutting down many refineries. They're frozen solid, so it's been driving gas prices up the past few months, I believe, maybe 1 or 2 months. I know that I have seen gas prices here in Oregon rise to some areas above $3, which is really uncommon for us. Usually it's in that $2.40 range, $2.20 at $2.40, and right now I think I saw the gas station was $2.99 or a little over $3 for some of the ones along the freeway. So oil is getting driven up there. The dollar did actually go down, I believe. I think they were at, it went higher. Okay. So it was at 91.03 at the start of the week. It went high to 92.07 or 92.17. Yeah, 92.17. So that's actually pretty positive. I don't expect the dollar to move higher. I thought the dollar would move weaker with as much money as getting printed here with the the stimulus getting approved. We may see the dollar weaken here on Monday. So what's today's date? The 8th? Okay. So it's already updated. So this is reflecting the current price. So maybe when they do actually sign the stimulus, the House finally approves it, we may see the dollar kind of break back down. Silver down this week 5.27%. Year to date, this puts it into the negative by 4.92%. We see gold down 1.66%. Gold has been having a rough year. It is down now 10.79%. Bonds this past week took a hard hit of 1.01. I've seen a lot of investors, they're pretty much refusing to invest in bonds at this current time. They don't really see any positive. There's nothing positive from investing in bonds. Generally, when you invest in bonds, you think your money will be safe. But here, within a 1 week change, bonds lost 1% there. And year to date is down 3.54%. I know that I generally, if I were to invest in, if I was looking for something a little liquid, if I was looking for something that provides a dividend, a stable dividend, and has some potential growth, I generally invest in AT&T. That's sort of like my bond stock go to, you can see AT&T over the past 5 days is up 6.19%, and year to date that puts it positive by 2.97%. Plus, right now AT&T, last I had looked, it was offering a roughly 6% to 7% starting yield, so that beats almost all bonds out of the water right there alone. Now, jumping into the 10-year yield here, just a few weeks ago, a couple months ago, we were down in the 0.6% range. Now, we moved just this last week from 1.46 to now 1.56. That's what, a 9-point difference to the upside. That's why we're seeing such a high raise in mortgage rates in other areas. I recently locked in my mortgage rate at a 2.75% starting, 2.75 for 30 years. And I saw somebody on Facebook post today that they got an offer at 4.25%, and that's higher, over a 1% difference there just within the month. I locked in early February, and here we are in March, and there's offers out there in the 4% range, and that could just be because of their credit score. There's a lot of factors that play into mortgage rates as well, so that could be another factor there as well. And mortgage rates right now, they rose here to 3.16, but this, I think a lot of banks are looking at where the 10-year yield is going and are probably just trying to be, maybe not as accurate. You can see here that rates here are at 3.16 recently, so they've been kind of climbing just steadily. But that is basically it. I think the only other thing that I had really posted this week, I did post the February dividends that came out. I think we discussed that last week. And then stocks took a dippity dip. And we talked a little bit about tax plans. So Biden's plan versus Trump's plan. Currently, corporate taxes are at 21%. Biden wants to change that to 28%. Income and payroll taxes is at 37%. Biden wants to bump it up to 52%. Small business taxes. So right now, I think I don't run my YouTube in an LLC. I run it just as a sole proprietorship. But my real estate business, I do run that as a LLC. So this would affect this one, where it's getting taxed right now at that 29.6% range. And this would bump it up to a 39.6% because we run it as a partnership between my wife and I versus just a sole proprietorship. And then capital gains and dividends, this is the biggest one right here. It's nearly a double right here, from 23.8% capital gains and dividend taxes to a whopping 43.4% for capital gains and dividends. So that is a huge change right there. And one of the main reasons that we've been really focused on investing through our retirement accounts. I focused mostly on our Roth IRAs. So that is going to be it for this video. If you guys did enjoy it, of course, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, if you have any comments or questions about anything in this video or just want to say hello, drop that into the comment section below, and I will see you guys next time. Have a great day. Bye.